The question about regulating cryptocurrency is really interesting because I don't think anybody knows what's going to happen yet. The Trump administration has really said that they are interested in blockchain. We've got Mick Mulvaney, director of OMB. He has been really bullish on cryptocurrency. So we know that there's some interest within the administration. In the previous administration, I think the hands-off approach by default meant that the states had to handle it. That brought us many states with many different regulations, and it caused a lot of confusion. The first state that really took on regulation was New York State. They issued the BitLicense, and that had the effect of shutting down a number of blockchain and cryptocurrency companies that were already in the state. And on the flip side, you've got a number of states who say they're very welcoming of digital currencies and they want more businesses to come in and open their cryptocurrency business or their blockchain businesses. So you've got states like Delaware. So now we're seeing companies move towards Delaware and set up shop there. Recently, the SEC's been issuing reports and statements about ICOs, which are initial coin offerings, as well as just general guidance on cryptocurrencies and blockchain. It scared a number of people, and I think there's no reason to be scared. What the SEC is saying is that just like any other sort of security, you're regulated by the existing securities laws. Not having regulation has a significant impact on cryptocurrencies because then you have fly-by-night exchanges. So people could get into the exchange, they don't know what they're doing, the exchange could fold up, and we've seen this happen many times before. People have invested a lot of money, they've kept it on the exchange has folded, and there's no recourse, so people end up losing money. We saw that in Japan with Mt. Gox. We've seen that in Florida with a company that was called Cryptsy, and we just see this over and over again. The IRS already announced that they were working with a company to do blockchain analytics. And once you start doing blockchain analytics, you're gonna come up with patterns, and those patterns are gonna lead you into different directions. So they can start investigating why they might see anomalies in trading patterns and transactions. Remember that the cryptocurrency blockchains, most of them are transparent and completely open, so we can all take a look at them, we can all see the transactions that are happening. Everybody's learning how this stuff works right now, and the government is going to take some time to catch up. But once they catch up, they'll be able to develop their own internal services to be able to analyze what's happening on the blockchain. I think it's going to be much easier to regulate than cash, for instance.